So I got a text today from a customer. We had spoken previously, and she'd asked me, how can I get the best interest rates? Today we're going to talk about this. And so you can go out there and shop and you can get the best interest rates out there. So how to find the best interest rates? Honestly, most of us have the same rates. It's very minimal difference across the board. The difference comes in two different ways. One, you're either a really big bank and you just have the ability to give a lower rate because you don't pay your staff very much money, so you can pass it on to your customers. The other way is like me, a mortgage broker. We can, you can ask us, I need a better, I need a better rate. How can I get it? And sometimes we can do little things to cut down our commission to help you get a better rate. So you can see if we will do that. Now, a lot of the big brokers won't be able to do this because their bosses, their managers don't allow it. But for someone like me that owns my own company, I have the ability to give you the best rate that's possible. Now, if you go to one of the big banks or one of the big lenders and you get one of their low rates, there's some problems here. They're much more strict. So unless you have like really good credit and you have a simple job, like a W-2 salary job, and you've been there for like 5 years at least or more, those loans are difficult. They will say they approve you, but when it comes down to it, you get down to the week of closing and they can't close the loan, or they can't close it on time because they have so many more, what we call overlays. They have so many more rules than I have to follow. I have a very simple system. I know exactly what I need from every client. If I approve you, you're approved. There's no question. These big banks, they just hire someone off the street that doesn't know a whole lot. They take the applications, they go through the process, and they approve you without really knowing exactly everything. And once they see everything, they tell you we can't do the loan. So it's a little more risky. But if you have perfect credit and you have an easy income, then it could be good if you have time. Now, the seller a lot of times won't wait for these big banks. They take longer, or these big mortgage companies. So if you're looking for the best rate, you can try there, or just call someone like me and just say, hey, I need 5%. Can you do it? The other guy quoted me this, and I'll see if I can match it. There's some other ways to get lower interest rates. Adjustable mortgages are now back with these higher interest rates from fixed rates. An adjustable rate mortgage is another way to do it. And the way this works is that you'll get a certain fixed rate for, let's say, 3 years, 5 years, 7 years, or 10 years. It's fixed, but after that time period, it will fluctuate based on the market. It's usually within 2 points of whatever the market's doing. So if the market goes down, then your rate will go down. If the market goes up, then your rate will go up. So you could try that, going with the adjustable rate mortgage. Government loans are always cheaper, like FHA, VA, especially if you're a veteran. VA is the best way to go. You get a lower rate. You get no mortgage insurance, no down payment. It's amazing. So yeah, you can go with government loans. That's a way, but there's some fees there. All government loans have a fee added to your loan. So not always the best option, but in this case right now, you can either pay a 6% conventional rate or you can get a 5% government rate. So it could be worth the fee that they charge. And that fee gets added to your loan. It's not like you have to pay it. It just, you have you have a bigger loan. Another way to get your rate down, of course, is getting your credit score up. You can use a credit repair company or like Experian, Equifax, TransUnion. They have certain tools to raise your score. Sometimes mortgage brokers like myself, we can look at things and tell you what you need to do to raise your score. Basically, here's how it works. You have 580 score, that's the lowest, so you're gonna have the worst rate. 620 is the next level. Your rate will be a little better. 640 is the next, then 680, 720, 740, and really above 740, it's about the same. So every time you reach one of those marks, you're going to get a better rate. You can also pay off some debts, because if you have lower debts, that will help with your rate because we see you as less of a risk, so we don't hit you with a higher rate. You can also put more down payment. If you put down 20%, 30%, 10% even, you'll get a lower rate. That will also help get rid of your mortgage insurance possibly, or reduce your mortgage insurance depending on the loan that you're going with. Now, I always tell this, that rate shopping isn't always the best solution. I have people that rate shop me all the time. Not always the best thing to do, because like the other day, I told this story recently. One of my customers, She's used me for about 5 loans. She was buying a $2 million loan. I mean, a $2 million house. And I had her approved, but somebody told her, I don't know who it was, told her they could give her a better rate. She went with them. Because it was such a big loan and she was one of my customers from the past, I followed this process. I watched it online to see if the house closed. And after a month, I saw that it was still pending and hadn't closed. I actually texted her and said, hey, if I can help, let me know. Long story short, I get a text about 45 days after they were under contract with SOS, like, please help. I took the loan. My rate was higher, as I couldn't go as low as they said, because that person actually couldn't do that rate because they couldn't close it, right? But we closed the loan. So she got a house. So who cares if the rate's higher or lower? If you don't get the house, it doesn't matter. So it's really important that you want to close. You want to use an experienced loan officer company. You want to meet your deadlines and you want to get that home. And there's some other ways to lower rates. You know, you can wait. If you go under contract, you can just wait through the process and not lock your loan and, you know, lock it the last week. Maybe the rates go down, maybe they go up. Not recommended, but something you could do. But generally speaking, we're all going to have about the same rate. The main thing you want to do is use an experienced loan officer, a good company, and make sure you close. If you're refinancing, that's another story. Yeah, shop your rate because it doesn't matter. You know, if it doesn't work out, you go to somewhere else. But if you're buying the house, just get the house. That's the main thing. The rates aren't going to make that much difference anyway. They might save you $40 a month. Doesn't matter if you don't have the house. You want the house, right? So paying $40 a month and have the house. That's the best solution. All right, my name is Jody from Great America Mortgage. I'm the loan officer, I'm the owner, I'm a broker, I can help you. If you like this video, please give me a thumbs up and subscribe to my channel, and I will be posting more videos to help you.